Europe has been openly imitating the US for a few years now. And now this is not about food or how restaurants have drive-through in the US, but it's something a little bit more subtle where Europeans have accepted that Americans do it best. And it's the way the capital markets are structured in the US. And now Americans have been able to create a culture where households and families at large have much more exposure to these capital markets and to financial products that can be considered more complex. In this video, I will talk about one of the most recent endeavors of the European Commission called the retail investment strategy. We will look at what comes with it, like the value for money assessment, the potential ban on inducements, and at the same time, as a bonus, we will also see what is changing or what is proposed to change with the disclosures to retail investors and how that compares to what was proposed in the United Kingdom. If this jargon makes sense to you, or if you want to learn more about it, watch this video. The retail investment strategy comes as a consequence, as a product of the Capital Markets Union in its second iteration. The Capital Markets Union is a broader plan of the European Commission that will support all the bigger projects of green transition, digital transition, you name it, and is founded on the understanding that in order to have support and achieve these bigger goals, it is necessary to involve retail investors across Europe and make sure that they can trust capital markets. And so the retail investment strategy is a package of legislative measures that basically aims at creating more trust in capital markets for retail investors, so that basically they can have the confidence to put their money into the capital markets as opposed to leaving them in low-yielding savings accounts, which seems to be the norm across certain states in Europe. It is quite difficult to make a comparison between what happens in the US for what concerns the exposure of families to the capital markets and what happens in Europe, right? But one thing that is clear is that in addition to rules, the European Commission should also work to foster the financial literacy of retail investors. If we look at what is the journey today of a retail investor to investments, likely it starts on social media. There is exposure to messages from influencers that basically might be overly enthusiastic about certain products. A retail investor would deem the disclosures or the documentation of this product too complex to understand, and that's why would rely probably on an advisor who is paid by a product manufacturer to sell them a product that likely is a little bit more expensive than it should be because there are different layers of cost, and likely is not going to be the best value for their money. And so when designing the legislative measures as part of the retail investment strategy, the European Commission looked at this journey, at all these steps, and tried to find a solution. So in first instance, one of the proposed measure is the one that relates to more transparency into the disclosures that retail investors receive, and as we will see, also make sure that this can be personalized by using more digital solution. One of the other areas that will be tackled by this legislative reform is the one of inducement. So inducement is what is paid by a product manufacturer to an advisor to sell their products. And here we like that Europe is taking a very pragmatic approach, because it's clear that the system has been designed like this years, for many years now, and transitioning overnight to an environment where inducements are no longer paid might come with the risk of breaking something significantly. And so the proposal is to have a phased approach to this ban on inducement that will take place in certain, let's say, execution-only scenarios to start. For what concerns the value for money, this is something that is new completely in Europe, but existed already in the US and was introduced also in the UK very recently. And if you want to know more about this, we've linked an article in the description of this video that talks specifically about value for money. And so basically, products that will go to market going forward will be only products that are very efficient on their cost profile and have a better likelihood of giving value for money in a return to investors. Lastly, we want to look also at what will happen with the disclosures, right? So far we had the PRIIPs KID in Europe, this other gigantic endeavor where the European authorities wanted to make sure that investors could compare different products with the support of a disclosure that was seen. In reality, PRIIPs was a big headache for the industry, and in the UK, as the UK exited the European Union, there was a clear decision to move away from PRIIPs. And if you want to know more about what the UK will do, we also linked an article in the description of this video. So what the UK will do in essence is we'll get support from digitalization, we'll make sure that investors can go on a website, type the amount they want to invest, and they will have a better view, more personalized to their situation, of what that investment will cost and what it will possibly yield them over time. And this is also what is proposed to be done with the retail investment strategy, where basically, even though the PRIIPs KID will be preserved and will always be there to be provided to investors when products are made available to them, there is an opening to personalize the disclosure, make sure that investors can have a better view of what an investment will cost them and what will yield them over time. Of course, we like a lot to see that this is happening because we believe and we agree that only by making retail investors more exposed to capital markets, we will have that additional capital that would allow the green transition and the digital transition. However, we also believe that this is only one side of the endeavor, because European authorities will have to work on building this financial literacy, which does exist in certain pockets of Northern Europe, but which will require a little bit more work in the rest of continental and Southern Europe, especially for all these investors that for various reasons these days still prefer to keep money in their bank accounts. There is more to come on European regulation and European distribution. Thank you very much for watching and stay tuned.